Wonderful good morning, ladies and gentlemen. Commodity TV here at the European Gold Forum in Zurich, and I'm very happy that I have Klondex Mines again here for an update. You remember the fantastic gold producer out of Nevada, and the guys, the last time we had them here, I think it was exactly 1 year ago, so I'm pretty happy. Company performed very well, and we want to talk now with John Seaborg, who's the Senior Vice President of Investor Relations and also Communication. John, good morning.
Good morning, Johan. Thank you.
Thank you. Great to have you here. Well, Klondex Mines, I mean, we mustn't introduce the company a lot. You are a fantastic producer, over 120,000 ounces gold equivalent. Let us shortly talk what was the last 6 to 9 months, the most important improvements.
Yeah, Johan, thank you. The company's been doing very well, as you pointed out. I think the most important thing that's happened in the last 6 months is the acquisition of Rice Lake in Manitoba, Canada. We paid $32 million for this asset. Once was worth 1.4 billion in another time, obviously in another gold price, but we think we can do some incredible things to this asset. We're in the process of doing our own analysis. We're going to update the reserve and resource model. It had 1.7 million ounces as defined from the prior owner. We're going to do our own work. We're going to put the Klondex stamp on it, do a detailed mine plan, make a production decision in the second half of this year, likely Q3. Okay. We're very confident that we can put this thing into production. It's exactly what we did at Fire Creek and Midas. We can take an asset that I think was underappreciated and operate it differently, the way that we did with Midas, turn that asset around. The same thing with Fire Creek. We're confident we can do the same thing with Rice Lake in Canada.
I mean, if you deliver the same with Fire Creek and Midas at Rice Lake, it will be a huge success. That's for sure.
Oh, yeah. And we're getting no value on our share price right now for it. Maybe 32 million, some of the analysts, which is exactly what we paid for it. We think this could be a 50 to 75,000 ounce producer per annum for 8 to 10 years. Again, we have to do the work, but we're confident we can get that into production. And if we do, we're going to see a big improvement in the share price.
Super. So that means the 32 million you have paid, it was including the whole mine equipment, processing plant, resources, reserves, etc., everything.
Everything.
I mean, that sounds like a bargain to me.
Well, we think so as well. Again, 1.7 million ounces of resource, a 2,500 ton per day mill, over 220 pieces of mobile equipment. We've already shipped some of that down to Nevada and saved about $7 million. Exactly what we did when we acquired the Midas mine. We shipped some of that equipment over to Fire Creek and saved about $7 million as well. Wow. So it's a very similar story in Canada, which is a country, a jurisdiction that we know very well and obviously is very pro-mining. Yeah,
and also you have a very favorable currency exchange rate.
That doesn't hurt, yeah.
Okay, questions I sometimes get from our viewers. Now you bought it, okay? You have to do some investments. You brought out drill results, which were very favorable. What do you think you have to invest to get it really up and running then?
We've committed 10 million Canadian out of our treasury this year. If there's any more investment required, it's going to come from the mine. We've told the guys up there $10 million to refurbish the track and to do some improvements on the hoist and the shaft, which is done, and do the detailed mine plan and update the reserve and resource. And anything else is going to come from the mine. They have, a gold mine underneath their feet. Yeah. They can cash flow and generate additional investment of capital from the mine itself.
Yeah, fantastic, great. Yeah. Let's talk about 2015. I mean, that was your second successful year. In really full commercial production. And what have you produced? And also, let's talk about the first quarter.
Sure. 2015 was actually the first full year of production. 2014, we began production in February when we acquired the Midas mine. So 2015, we produced about 127,500 ounces, up roughly 16%. In 2016, our guidance is actually 145 to 150,000 gold equivalent ounces, another increase of about 16% from last year. So the company continues to grow 15, 20% per year. In Q1, we just put our results out, our production results. We produced just over 30,000 ounces in Q1. Our production in 2016 is back-end weighted as we open up new faces in the mines and continue to push the development at Fire Creek, we're going to see the production ramp up in the second half of 2016.
Okay, so let's put it that way. You are a bit slower in the first half, but the second half you're really speeding up.
Correct.
Yeah.
Correct.
Okay, fantastic. Let's talk about some financials, because that's always important, of course.
Sure.
First of all, what are your all-in sustaining costs?
Our guidance for all-in sustaining cost is $850 to $900. But we think the most important metric is not all-in sustaining cost, because that can be manipulated, if you will. I mean, give me a number and I can take sustaining capital and put it in a different bucket.
Yeah.
What's important to us is all-in cost.
Yeah, that would be my second question.
That's a great question. We have $50 million of capital that we've committed to spend this year.
Yeah.
Assume all that is sustaining, right? Let's not classify it. Our all-in cost is $950 to $1,000, so under $1,000 an ounce, and that I think is very competitive in the space.
Yeah, it's pretty healthy margin. What is cash in the bank by now?
We haven't put our financials out for Q1, but we had roughly $60 million in the bank as of the end of last year, plus another $20 to $25 million in inventory, very liquid, so roughly $85 million in liquidity. Subsequent to year end, we did write a check for $20 million for Rice Lake. The other $12 million was in a note to the seller. So we're very strong balance sheet, and we just secured a $25 million line of credit, which we have not drawn, but we don't need the money. But the best time to get the money is when you don't need it.
Absolutely.
So very favorable rates at 4%. So very strong financially, and we've come a long way from a company in the last 3 years generated over $100 million on the balance sheet.
Wow, that's fantastic. Yeah. And also, of course, you can generate all your development, your sustaining capital from cash flow, right?
Absolutely.
So you mustn't draw on anything.
No.
Okay, so there's room for acquisitions?
Well, we have to digest Rice Lake first, but we're always looking.
To hear that.
We're always looking, right? And our first priority is to get the mill in Nevada full, right? So we're not going to be distracted. Nevada is still our core assets, Midas and Fire Creek. Fire Creek is still a very young mine, and there's a lot of upside at Fire Creek. We just announced a new discovery to the east of our main workings that was identified from some geophysics, and the first 2 holes hit. It's a 19,000-foot strike length on a geophysical anomaly. We're very excited about that. And then we have to get Rice Lake up and running, and we think that's going to add significant value to our shareholders. But we're always opportunistic. That's the canned line, right?
Well, that's right.
It's true.
Yeah, and I mean, you have a very good currency. Your stock price is at all-time high.
Yeah. Yes, it is. 424 Canadian.
Fantastic. What I like with your company is that you are not doing like M&A adventures. When you do something like Rice Lake you bought, it is within your, let's say, budget, I would call it. Yeah, that's very good for the shareholders and also for the future. Where do you see, maybe let's say 2017 from the organic growth 2018, where can you develop Klondex? Production-wise, what is your feeling? I know it's a speculation for sure.
Yeah, and we haven't put guidance that far out, but it's not hard to imagine Klondex being a 200 to 250,000 ounce producer. Well, as we continue to develop Fire Creek, Midas and Fire Creek in Nevada, we're going to have 150,000 ounces this year. Next year, that'll go to 180, 100, who knows, and then throw in Rice Lake in there, 200 to 250,000 ounce producer is easily achievable, I think. Yeah.
Wow, fantastic. Yeah. And of course, with good margins and healthy low costs.
Well, and that's the key, Johan. We want to make sure we're not just chasing ounces, but they're profitable ounces.
Yeah, exactly. Great. Thank you very much. It was a good last statement, and all the best for that success, and look forward to an update in fall latest.
All right. Thanks, Johan.
Thank you very much. Ladies and gentlemen, that was John Seaborg, the Senior Vice President of Investor Relations and Communications from Klondex Mines out of Nevada. Well, you heard it, the company is in sensational shape, over $85 million in cash and also in inventory. And they want to be at a 200, 250,000 ounce producer in approximately 1.5, 2 years, I would call it. Great acquisition with Rice Lake, organic growth ahead, everything you need for a successful investment. Check out the company. Thanks and bye-bye from Zurich.